Hey y'all, this is Ryan with TrendLizard.com. I want to do another update on Aurora Cannabis today. This is a stock that we've looked at a couple times before. It deserves an update today. It's moved below an important support recently during a huge tank job off its high at around 1250. It moved below 7, which we identified as an important support on its way back towards recent lows. It's trying to bounce now. It finds itself at a really interesting point as far as its future and what's going to come next. So we've got some important things to look at, just provide an update to show you where it might be heading in the future. So hopefully this is helpful. So let's go ahead and dive into the charts and see what's going on with Aurora Cannabis. Here we go. Okay, so back to this chart here with Aurora Cannabis, now ACB, now that it's listed on the New York Stock Exchange as it has been for the last few weeks or so. Just given the overall view here, it chopped around, as you know, back in this time period here, early 2016. Kicked it into gear about August 2016, gave us a huge five-wave advance before it really broke down and tanked. Now it reversed firmly off the 2018 low, actually set a new high. We were very hopeful that this was the resumption of its uptrend, but that has proven to not be the case based on the tank job that it's done in October and really retraced the majority of this advance that played out before that up to the new high. So this calls for some new a new labeling, new information, tells us that something different is going on. Obviously, this was not the resumption of the uptrend. If it was, we wouldn't have completely got broken in half here during October. So this gives us new information. What it tells us is that ACB is still in this counter trend pullback that started back in early 2018. That's obviously pretty obvious at this point with what it's done, coming back towards these lows here. But it doesn't break the chart completely. Now, this is still looking like a counter trend move, as big as it is, even though it took about 61.8% of the value of the move up here. It still has found support around this important support level overall. So overall, it still looks pretty bullish as long as it can get it together and avoid continuing to tank here. And we'll dive in a little bit and take a little bit closer look. But on the long-term time frame, what the tank job does is indicates that this pullback is still in play. It's not yet over, but it does still look like a counter trend move. So on the long-term time frame, despite the damage that it has been caused, it still looks bullish overall. So let's go ahead and dive in a little bit closer and look at this pullback here. Here it is. This looks at the 2018 pullback. This still doesn't look like a trendy move to the downside. It still looks like it's full of three-wave pullbacks. What we're thinking has happened is that the A wave of the ABC pullback completed in April. A B wave took it up to the new high, just the marginal new high it set in early October, and a big C wave decline has been in place since then, and that's what's caused so much damage in October. But it still looks like one big counter trend move, as you can see here. It's unfortunate that this was kind of a sucker move here to the upside, set a new high. But that's what it is. But again, overall, we can't really say that this is absolute loss, absolute destruction, because it does still look like a big counter trend move. So let's go ahead and zoom in on this down leg here real quick before we do that. Note that the low that's happened in October is really close to the low that happened back in April. So there is some support there. There is a case that can be made that this C wave decline has ended and things are going to look a lot better from here, but we can get more specific. So let's go ahead and just zoom in on the recovery and the down leg in October. So here's the down leg. It was a five-wave move. That's what we expect from a C wave decline. We expect C waves to be five-wave moves, and that's what it seems to have been. It looks like there could be an important low that was recorded on the 30th. It's bounced up pretty nice from below 550 up to 7 over the last few sessions or so. It's kind of grinded around a little bit, but this does have the potential to be a low. So here's what we need to be watching as we move forward. If a low is in and if ACB is ready to resume its strong advance, it needs to stay above 6. Bottom line, if it goes below 6, it means the pullback's not over. Much lower levels are possible. It can move all the way back down towards 4 even as the low of the pullback. That's where it was here. So it could really open up the door to a much larger pullback if it goes below 6. If it can stay above 6, it's going to have the potential to continue much higher and again resume its overall uptrend. The most important level to the upside, granted it's fairly far away, but it's 950. If it can move above 950, that's proof that this down leg is over, that the overall pullback as expected is a counter trend move. If it can move back above 950, it's going to really set the stage for a much larger advance. So I think those are the levels you need to be watching. I think the most important is 6. It has to stay above 6, or it means that whatever happened down in October is not yet over, and the door is open to significant losses ahead from there. But if it can stay above 6 and work its way all the way back above 950, it's going to be a very bullish thing based on the Elliott Wave pattern, and that'll open the door to a much larger advance and really recoup what has happened in October. So I hope that's helpful. This is what we do at TrendLizard.com. We look at stocks and ETFs all day long using Elliott Wave theory, and we find high probability trades and tell you exactly how to get into positions and where to sell. So I hope that's helpful. Again, have a wonderful day, and we'll talk to you again soon.